If you're earning over £100,000, some of your income is effectively being taxed at 60% and you probably don't even know it. That's right, 60%. But don't worry, with a little bit of tax planning, we can quite easily help you get all that back. We all have a tax-free personal allowance of £12,570, but when you earn over 100,000, your personal allowance reduces by £1 for every £2 you earn. So if you earn £125,140, that means your personal allowance will be zero. Because of this, any income that falls between 100 and 125,140 is effectively taxed at that 60% rate. Now, it's a little bit complicated, so I'll run through the numbers in a fairly simple way to try and help explain. So if you were to earn £100,000 and receive a £1,000 pay rise, not only will this cost you 400 quid in tax at 40%, but you then lose £500 of your personal allowance. So now that extra £500 will also be taxed at 40%, costing you another 200 quid. Now, unfortunately, that means that your £1,000 pay rise just effectively costs you £600 in tax, or 60%. Now, a lot of people can get taken over the 100,000 mark by bonuses towards the end of the tax year, so this can be a really important thing for a bit of last-minute tax planning before the 5th of April. So how do you actually get your money back? Well, quite simply by making pension contributions. Now, I'm going to assume you are earning the full £125,140. So if you were to pop £20,112 into your pension, you'll receive 20% basic rate tax relief from your pension provider, magically turning this contribution quite helpfully into £25,140. In turn, this brings your total taxable income back down to £100,000. So guess what? You now get your full personal allowance back. So that's more than £5,000 in tax relief straight into your pension, and another £5,028 in tax saved by getting your personal allowance back. And on top of this, further higher rate tax relief on your pension contributions can then also be reclaimed on your tax return. So overall, that's £15,084 extra without actually earning any more money. It's pretty helpful. So this can have an even greater effect if your pension contributions are made via salary sacrifice, as the full higher rate relief will get paid directly into your pension. And if your employer passes on their national insurance savings, you'll benefit from relief on this as well. Now look, your brain is probably already turning to mush by all those numbers, and things also get a little bit more complicated to manage if you have significant investments and could make use of multiple tax wrappers. So if you're in that situation and you fall into this income bracket, it's a really great idea to get an advisor involved. What a great question though for that advisor. Can you make me more than £15,000 richer without actually needing to earn a penny more? And the best thing is that the answer is potentially yes. So if you're earning over £100,000 and you have a reasonable pot of money in place, maybe take some advice. Because remember, your money really does matter.